Across the commodities sector, heavy, uniform selling pressure defined the trading week. 3 of the 4 major precious metals absorbed significant downward movement, yet one specific metal remained completely isolated from the broader crash. This sharp anomaly forces a closer look at the specific market gravity operating over the last 5 days. Identifying how this single asset held its ground is crucial to understanding that metals within the exact same class do not always share identical vulnerabilities. The overarching economic environment for the trading week of June 8th through the 12th, 2026, set a distinct tone. Broad downward pressure across the sector was triggered directly by the release of elevated inflation data. The Consumer Price Index established the initial layer of macroeconomic pressure, registering at 4.2%. Compounding this narrative, the Producer Price Index arrived shortly after, reading 6.5%. Together, these dual inflation metrics function to maintain a heavy, unyielding ceiling over the entire precious metal space. This macroeconomic backdrop created a clear expectation of uniform losses, establishing the stakes for the incoming price data. The market heavyweights reacted immediately to the week's inflation prints. Looking at gold, this chart shows a noticeable decline, closing the week down 6.48%. A contraction of over 6% reflects clear, aggressive institutional reaction to the macro data. Silver faced an even steeper wave of institutional selling pressure. Silver finalized the trading period down 7.94%, marking it as the most severe casualty of the week. The massive erosion in both of these primary metals proved the macro inflation pressure was dictating market direction. Moving down the market hierarchy, we examine platinum's response to these exact same conditions. Platinum showed no independent strength, fully aligning with the downward momentum established by gold and silver. This slate gray pillar reveals platinum finishing its week with a performance of negative 7.59%. A drop of nearly 8% confirms an absolute, unified sector sell-off among the top 3 assets. With 3 major metals decisively crushed by the same inflation data, the rigid rule for the week was set. The sector was falling. This brings us back to the central anomaly, the single asset that defied this established rule. Against the immense, uniform declines of the first 3 metals, the resilience of the final asset stands out. Palladium was the absolute exception to the week's macroeconomic gravity. It separated itself entirely, remaining uncorrelated to the broader sell-off that dragged down the sector average. While its peers suffered massive losses ranging from 6 to nearly 8%, Palladium held a fractional gain of positive 0.08. Palladium's isolation demonstrates that even overwhelming macroeconomic trends cannot guarantee absolute uniformity across an asset class. This review serves strictly to document historical market context. It shows that metals often follow their own independent tracks, despite sharing the exact same macro environment. Be sure to join us for our next regular market review. This was the METLYZ Weekly Metals Recap. Simple data, clear market context. For the next METLYZ Weekly Metals Report, check back next Saturday. We do not provide financial guidance, and this data is for educational review only. Thank you for watching.